All right, welcome to the Explainer. So, if you've ever felt like the market is, literally out to get you, I promise you are absolutely not alone. In fact, billions of dollars are lost every single day by retail traders falling for the exact same mechanical trap right after the opening bell. But today, we're going to look at the underlying plumbing that drives price action, and we're going to decode it using a universal structure that the most profitable operators in the world all share. So, grab a notepad, get focused, and let's decode the universal trading trap.
Okay, let's just dive right into this visceral pain for a second. We've all been there, right? You're sitting there, hands in your hair, staring at the monitor in absolute disbelief. You enter the trade, your logic is totally sound, but then the market dips just enough, literally just enough, to hit your stop loss, you get flushed out, and then, as if to completely mock you, you just helplessly sit there and watch the real expansion happen perfectly in your original direction, but without you. Man, this is the ultimate trader's trap. It's this vicious cycle of deep frustration and confusion where you just can't figure out why you keep getting it wrong. You start second-guessing everything, right? You assume, oh, my analysis is flawed or my indicator is totally broken. But the actual truth, you're simply falling for the manipulation trap. You're entering during the fake move, getting totally flushed out, and then left completely behind.
Actually, this frustration is perfectly summed up by Doug. He's a 26-year veteran trader over at the Rumors, and he says this, quote, "Every time I tried to get smarter with the market, it always made me look stupid." And honestly, that hits the nail on the head. Because it isn't about outsmarting the market with, a dozen complex indicators. It's about realizing that the market is actively, mechanically preying on standard retail behavior.
Section 1, the Rosetta Stone of Trading, Different Languages, Identical Mechanics.
Now, this is a massive pattern interruption. If you spend enough time researching, you're going to hear about smart money concepts, or price action, or volume spread analysis. And they sound completely different. But here's the crazy part. Every serious operator out there has independently discovered the exact same universal market structure. They're just using completely different words. Look at this. TRLC calls the sequence exhaustion, final trap, and structural shift. Meanwhile, JadeCap describes it using internal range, liquidity raids, or swing failure patterns, and then trading to external range targets. And then the Session Trading Lab, or STL, calls it the AMD cycle, accumulation, manipulation, and distribution.
So the language differs, sure, but the actual mechanics, they're absolutely identically the same. Whether you want to call it a final trap, a liquidity raid, or manipulation phase, the underlying plumbing of the market doesn't change one bit. This specific sequence repeats itself on every single time frame, in every single instrument, and in every single market. No exceptions. Section 2, the Universal Market Structure, AMD. All right, so these are the 3 universal steps that you literally need to burn into your memory. First, the market exhausts the sellers and accumulates positions. Second, it manipulates the eager buyers and springs that final trap. And third, it distributes to the real target with a massive structural shift. Let's actually pop the hood and look at what each of these looks like in practice. So, step 1 is accumulation, or what TRLC refers to as exhaustion. Heavy selling hits a floor, but the price, it just stops dropping. Now, why is that? It's because someone is absorbing the panic. To the untrained eye, it just looks like boring, sideways chop. It feels incredibly quiet, but underneath the surface, institutional players are quietly filling their massive orders. They are systematically absorbing all that supply trade by trade. Then we get step 2, the manipulation, the final trap. Now, this fake breakdown is the exact moment retail traders are tricked into panic selling. The price breaks below that established floor we just talked about, and it looks for all the world like the downtrend is resuming, but it's a lie. It's a trap. It's this sudden, violent move down that just violently snaps right back up into the range. And look, this isn't magic. It is pure market plumbing. When the price breaks that floor, all those hidden stop losses are triggered. And think about it. What is a stop loss? Legally, it becomes a market order. So this creates a massive wave of forced mechanical selling. It's a self-reinforcing price cascade. The smart money is literally using your stop loss as the exact fuel they need to fill the rest of their position, and then they instantly reverse the price. Which brings us to step 3, distribution, or the structural shift. Once the trap has completely cleared out all the available supply, the path of least resistance just flips. The market expands effortlessly with strong impulsive displacement. And as JCap teaches us, this expansion has a very specific destination in mind: high-confidence external range liquidity, basically running out the old highs or lows. Section 3. Surviving the manipulation phase, the operational response. Okay, so this is exactly where the session trading law behavioral operating system comes in. Now, the STL isn't just, another strategy trying to replace all the others. It is the mental framework, the literal operating system that makes these market mechanics consistently tradable without all that emotional panic. It basically validates the setups from TRLC and JCap so you can actually execute them in the real world. And our ultimate defense mechanism here is the STL:12 rule. This is your operational response to that universal manipulation mechanism we've been talking about. It's a strict behavioral rule that physically prevents you from entering your trade during the trap. You purposefully just sit on your hands and wait out the initial danger zone. Let me show you exactly how this timing works.
Look at this timeline. This is the heartbeat of a session. From the session open at 0, the market is just testing the waters. Then, right around the 12-minute mark, the manipulation phase violently peaks. This is exactly where the trap is sprung. By the 20-minute mark, the price reclaims the level, confirming the trap. And usually, right around the 45-minute mark, the real expansion finally begins. A professional operator recognizes this mechanism and strictly sits out that entire 12 to 20-minute window. As Doug from the Rumors notes with his sneaky pivot strategy, quote, "We need the sneaky candle. Let the first 15 minutes tell us what level it picks." You see, you don't guess the direction. You let that opening 15-minute period do all the dirty work for you. You let it spring the trap, shake out all the impatient traders, and reveal the true intention of the market before you commit a single dollar. Now, future pacing yourself into this mindset, it changes everything. You are now the enlightened, calm, collected operator. While everyone else is pulling their hair out, getting stopped out in the first 15 minutes, you're simply sitting back, sipping your coffee, watching the trap unfold. You know exactly what comes next, and you are completely safe from the carnage. So, bringing everything we've learned together into one invincible, unified checklist looks exactly like this. First, wait out the 12 to 20-minute danger window. Second, look for TRLC's exhaustion to validate that the trap is actually real. Third, use Doug's sneaky pivot to validate your entry on that third candle. Fourth, target JCap's external range liquidity for high confidence. And boom, you have just executed the STL AMD cycle seamlessly. So the absolutely crucial point to take away from this entire explainer is a total mindset shift regarding market traps. Once you understand this Rosetta Stone of market structure, the fear just disappears. You realize the manipulation phase is not your enemy. It is literally the fuel the market needs to deliver your profit. So ask yourself, the next time the market plummets at the opening bell, are you going to be the liquidity, or will you be the operator waiting to strike? Thank you for joining me on this explainer. The manipulation phase is not your enemy. It is the signal that expansion is coming. Session Trading Lab.